Hi guys, Solomon Sage here, and today I'm going to teach you how to make 1,500 US dollars on a weekly basis. You see, this is one of my funded accounts. I am a six-figure funded trader with multiple funded accounts, and this one is one of the accounts where I trade. I do not go in aggressively, and I believe that you too can be able to make the same amount of money. And as I'm telling you, this one is not a demo account, it's a funded account, as you can see, and I've hidden the details for security purposes. So I want to teach you how you can do it using the strategy that I use. Okay, so let's get into it right now. You forgive the background noise. It's raining heavily here, and I just thought of bringing in the lesson, and I hope you get it well. So let's get into it. This is the trade that I got. So I got this trade. It was a trade on gold, and you too can also be able to make money on gold, because this strategy works on gold, it works on NASDAQ, and it works on currencies too. So you see that this is a trade where before anything, I had to set first my risk-reward ratio. You see, a disciplined trader needs to have a risk-reward ratio. What is it that is risking, and what is this that he wants to achieve as a reward? Okay, so my risk reward ratio was 1 to 2. So I was risking 1 in order to make 2. I was risking $750 in order to make 1,500 US dollars. Okay, so that's where we start from. That's the reason why I had to put in, and you can see here that this denotes the details of where I entered from and where I exited. As you can see, the details, the stop loss, the TP, and the exit. Okay, so everything is in here. So that's the reason why I had to put it this way. So now that I've explained to you that before anything, you first need to start with your risk reward ratio. Once you have set up your risk reward ratio, you need to risk 1 in order to make 2. Now that's when you get back on the chart. Okay, so let me remove this one so that you understand well what I'm talking about. Okay, so the charts are like this. You see, the horizontal lines are just there to tell you where I entered from, where I did put my stop loss, and where there was, the TP. So I looked at the chart this way. I saw that here there has been a demand level. Okay, a demand level. The price created a demand, and after a moment it dipped inside, and after it dipped in the demand level, it started going upside, and after it reached upside, it created what we call, after the demand level was touched, the demand level was touched in here. As you can see, it was touched in here. So the price entered in the demand level, accumulated orders, and started going upwards. And when it went upwards, it created what they call the order cluster. Okay, let me put it for you. This is what we call an order cluster. Okay, so by the time it created an order cluster, we knew that an order cluster is supposed to be broken. Okay, as you can know the word order cluster. So there is a cluster, a group of orders, and when there is a group of orders, the orders ought to be taken. So here it is. We knew that here there was an order cluster, and the order cluster always draws the markets to its direction. But not only did I see that, but I came to realize that there was what we call a flip zone in here. You see, this one was a flip zone. How is that a flip zone? It is because it is what they call a resistance turned into support. So it dipped, it went, and it touched. It was resistance at one level, and it turned into support. So by the time resistance turned into support and the price started moving, I saw already this one. So when it reached around here, that was my entry point. And I knew one thing. I knew that, let me try to see if we have arrows. I knew that the price was supposed to go up. I knew that, you see. So after there was a flip zone, this one, it touched here, it went above, and it came to retest again this area. Okay, so after there was a flip zone, and after I have known one thing is that the order cluster asked for the price to come around it in order for it to be broken, then I entered the trade exactly here, as you can see. But now, after I entered there, I just had to wait, and I had to put the stop loss down there. So you need to make sure that when you are putting a stop loss, you don't put a stop loss at this area, because this is an area of flip zone. The price can retest again. So what you have to do is you need to give a stop loss the ability to breathe. Okay, and because you give it the ability to breathe, it ought to be slightly below the flip zone. Okay, so that's many mistake that many traders do. They don't give their trades and their stop loss the ability to breathe. That's the reason why they are mainly taken out. And after I did that, I had to wait, and all of a sudden it went here above the order cluster. It broke the order cluster that is here, and it went above, you see, and it had to touch my take profit. Now, how did I set my take profit? My take profit, I knew that when price goes, the second area where there is also an order cluster is a previous high or a previous low. And here we can witness a previous high. And there are also orders there. Okay, there are also orders there. And I knew that around this area, there was going to be orders that were going to be taken. Okay, so afterwards, that's when I knew that, okay, this is a place where at least I should put my take profit closer. You see, then boom, there was a last fractal cluster, and it went in my favor. So here is a key takeaway. We saw that the first thing that was there, let me put things in order. The first thing that was there is the area of supply and demand. The price had to hit the area of demand, as you can see down here. It created a demand, and after it took on the demand area, it accumulated enough orders. Okay, then it started going up, and when it went up, it went in the right direction. Now listen to me very well. I already predetermined a direction way back. Okay, so here, if there was any selling opportunity, I was never going to take it, because there is a pre-market analysis that I do, okay, that I talk about in my advanced lesson, that gives me an edge of the direction of the market. You see, knowing how to trade, technicals and fundamentals and every type of trading is not enough. You need to know where the market is heading to, and you don't get to know it through technicals first and not necessarily through fundamentals. There is something that you need to learn that teaches you how to know the direction of the market, and that's what indeed I teach in my advanced course. Okay, indeed, with this knowledge you can make a difference, but we do a pre-market analysis where we do identify the direction of the market. So which means we knew that the bigger bias is on the buy side, and if there was a selling opportunity, I was never going to take it. And buy rebounds, even if I did not analyze well, because we know through our pre-market analysis that the market will be going up, then it becomes an advantage for us because we will still be on the winning side. But the analysis helps us find the right direction. It helps us find the right entry, not the right direction, but the right entry, so that we don't get caught by stop hand or anything like that, so that our stop losses should not be in a place where it's not supposed to be. But the direction on its own comes from a pre-market analysis that I talk about in my advanced course. So I hope indeed With this information, you can make a difference. And if you want to understand more of this strategy, then you can indeed let us know, contact us, and we are going to teach you everything, including the pre-market analysis that I'm talking about, where you know where the market is going, the direction of the market is going beforehand. Okay, so that's pretty much that. Use the information that you have at hand, and if indeed you'd want to upgrade, we'll be available to help you. This is Solomon Surge, and I am signing out.